Walt, we're back at it. Another week, another Uber announcement. I got to tell you, this printing press is running on overdrive. Perhaps it's running some NVIDIA Blackwell chips. I don't know, but it keeps pumping out the news over at Uber. Waymo says, bye-bye early rider. Hello, everybody rider in Miami and Orlando. And then Lyft, they pulled back the curtain in Nashville and the depot they're building specifically for autonomous vehicles. But let's start with Uber and Lucid. Another week, another deal, and for me, another press release full of questions. You want to break it down for us?
Waymo is just kind of like just chugging along, right? Every week they're just, expanding in a new market, in this case, Miami and Orlando, which I think you've already tested. I think it's also highways too. So it's not like where they're going. It's a very quick evolution in these markets now. And part of that is part of this, I guess, generalization, the speed of AI development. I think more people are kind of catching on to this concept of like, even though it took a decade or so for Waymo, that the kind of accelerating expansion from here is there. Obviously, that's a benefit to new entrants as well, because they also benefit from how AI is accelerating a lot of things. I guess my question to you, Grayson, can you remind me, were you on the highways in Miami in a Waymo already with your, some of your early adopter access? And then secondly, Orlando, are you aware of whether, these cars can actually operate, taking people to the Disney resorts?
Well, folks, we're starting with Waymo, not Uber. I got ahead of myself there. But to Miami, no, I have not been on the highway in Miami. When I was an early rider in Miami, it was all surface streets. And I want to clarify for the audience, when I was an early rider in Miami, it was only on the mainland. It wasn't going out to the beaches. So no, wasn't there. On Orlando is not operating on the freeways, and Orlando is not operating at Disney World yet, which I still call the Reedy Creek Corporation. I know Governor Santos renamed it. Don't remember that name, but I still call it Reedy Creek. If you look at the Waymo map, Walt, it's carved out. No, it's not shaped like Mickey Mouse with the ears or Goofy with the big floppy ears as well. No service there. Why? There's something called Disney Strategic Alliances. And what does that mean? As any parent who's taken their children to Disney World, you've got to open up the bank account and spend a lot of bucks. Not Mickey bucks, real bucks. And that partner, drum roll please, is Chevrolet. Chevrolet is owned by GM. So it is my assumption, my hunch, that Waymo will have to enter into a corporate strategic partnership with Disney to be able to operate there. Again, that's a hunch just based on the way that Disney does business and the way that you have to pay, I'll call it the Mickey Mouse tax.
Well, no offense to Sterling Anderson, but if they're going to wait for GM to deliver some autonomous vehicles, to get people into the parks, they may be waiting for a fair amount of time. No, I get that there could be some issues between Disney and YouTube, given some of the competitive issues that they have, relative to their media business. But this seems like a product, some type of autonomy product you'd want to have in Disney. It seems consistent with the brand and how they'd want to attract people there, especially given what you've said in the past of even Dara, the CEO of Uber, in terms of, autonomy as a tourist attraction. So, notwithstanding the existing relationship with Chevrolet, which means GM, if they were to do a partnership with someone to get, cars into Orlando, who would it be? And do companies that are not Tesla have an advantage because of the fun sensors that they have on the roof? It makes it seem more like something out of Tomorrowland if they have sensors as opposed to Tesla, which just looks like any old Tesla.
Well, we're going to go in the way back machine here to the early days of autonomy. This was Iger's first run before Chipmakers, to give individuals a timeline there. It is when companies were still operating primarily with safety drivers. In the early days, when Walt Disney Imagineering was exploring, I used to use the words exploring, putting autonomous vehicles at Disney World, because yes, they have explored it. And yes, for full disclosure, I have met with Disney way in the past about this. There was two interesting clauses that had to be part of that contract. These were the early days. One, and ready for this, Walt? The vehicle had to fit Mickey Mouse. No joke on that one. That was a requirement. And two, they wanted to put Mickey Mouse ears where the LiDAR sensors were to kind of make it look like the Mickey mobile. And you might say, well, why is there precedent for that? Years ago, and I don't know if they're still doing this, Lyft operated minivans, as in Minnie Mouse, polka dots, human-driven vans around the parks. There is a great opportunity, in my opinion, for Disney to put Waymo there. I was talking to a parent the other day about this, and they said, I got stuck at the Animal Kingdom for 45 minutes waiting for the bus. It was a pain in the beep, 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 beep. Well, Waymo solves that issue. You get it out, you can go to more parks. You spend more time in the parks, you spend more money. Outside of the old requirements, and we don't know what the new requirements are, it makes a lot of sense. You're keeping people in the Reedy Creek Corporation, which I know it's not anymore, and they're going to spend more money.
I think I have a better idea for Disney than Waymo, because if you're Disney, you want to keep people on your properties, or at least affiliated properties, and obviously Waymos can take you to any old hotel and have someone else benefit from your dollars, and you obviously want to take those people to whatever that place is where everyone goes to, to restaurants. I always forget the name of it, but you have Glydways. Glydways, who I think, I didn't see it in our show notes, but I think raised some additional capital this week. And, I always remember when I was a kid going to Disney, and you had that monorail system and how cool that was at the time, because you would, get off the elevator at your hotel. I think it was the Cosmopolitan, and it would take you right into the parks. Glydways can give you that Tomorrowland-like experience. And because Disney effectively controls all of that real estate there, and the way Florida is in general, where you don't need to basically do eminent domain and right of ways, you could put these dedicated paths for a Glydways type vehicle. And I think those Glydways vehicles would fit Mickey Mouse. So it would check the box for Mickey Mouse and whatever other characters you'd want to stuff in there. And you would also be able to limit it to the locations that are basically Disney properties. So it would handle the scale of people, because Glydways is a great example of why this California train should not exist. You can handle scale of people with individual rides and not have wasted multi-million dollar assets of empty seats. So I think, my suggestion on the autonomy front would be maybe Disney should cut a deal with Glydways, and that would be economically beneficial for them.
That's an interesting point. I would still vote for Waymo, but your point is, and today you can go to SeaWorld and you can go to Universal Studios. And we know a lot of families based on tourism data that go to both parks. So you're right. You keep it in that controlled environment. Very good case there. But if you look at the way that Reedy Creek Disney World is laid out, Waymo makes more sense, because the monorail is using the monorail's example. It's limited to where it can go. Just that's based on cost, by the way. But I believe, in my humble opinion, that the Waymo gives more flexibility.
Well, we can agree to disagree on that one, but either way, we would guess that Disney's going to want to do something in this space. It seems on brand for them to do that. Who knows with the new CEO and where that company is going next. Moving on, Waymo is not just doing stuff in the U.S. This is an international company, right? In London, apparently, I don't know what exactly is new. Maybe you can explain this to me, Grayson, because as our listeners know, when I was back in London, I don't know, it was months ago now, I spotted a Waymo on the street. So what exactly did they announce this week in London?
They announced the next step, as you and I demonstrated the 6 steps in an earlier podcast. When you were in London, hopefully you said hi to His Majesty King Charles, is they were manually driving. They had 2 hands on the wheels. Now Waymo is driving hands off. So they're safety drivers, and they're in the autonomous testing phase. The next phase of that will be removing the driver, so that they officially entered the next phase, getting closer to driver out testing, and then eventually, when the regulations allow, going to full-blown commercial operations with no safety driver.
Well, that seems like a good segue into Wayve, who's based out of the UK and I think is in London, who just raised $60 million from a couple of chip guys as a follow-on investment from the earlier $1.2 billion investment that they had. So here's Waymo making progress in the home market of a company that is, I think, allegedly trying to compete with them, but maybe they're not. What's the latest on Wayve, and what was your read on this incremental investment from Qualcomm and others?
With the investment of $60 million from Qualcomm, AMD, and ARM, it signals to me, based on the architecture of the chips, ADAS, is that Wayve seems to be leaning into a level 2 system. I want to use the term a level 2 plus system. Any way to describe it, they seem to be leaning in towards an ADAS system. Because right now, I mean, Qualcomm is developing some technology for L4. I haven't seen it commercialized, or I haven't been in a vehicle operating it yet. That for the compute in the vehicle or in order to achieve L4 outside of Tesla, it's mostly NVIDIA at this point. So to me, this investment signals a growing interest in the ADAS market.
I mean, I think I deserve a clappy hat for this one because I think I kind of alluded to this in terms of Wayve and what they're showing versus not showing and whatever. I mean, this is ADAS. And by the way, ADAS level 2++, I think can be a huge market. I think Tesla, we'll get to this later, but getting approval, in one European market that can lead to others can open up, I think, what is going to be an important market. But obviously there's critics there to say level 2, doesn't get to level 4. I would guess that those criticisms apply no matter who it is. Like that structurally, I've heard this argument. I'm not saying I agree with it or disagree, that it's structurally a different type of approach. So it would be great to know more about kind of the Wayve, what the timeline is, what the roadmap looks like in terms of their products. But like Alex Kendall, the CEO, when this announcement happened, he's like boasting on Twitter, why automotive chip suppliers are rushing to invest in this self-driving startup? Basically saying like, hey, this is great. These chip suppliers are rushing to invest. I mean, I'd rather see like Tiger Global or others in there. Chip suppliers invest because they get revenue, right? They want to have a place at the table to get revenue. Your point is that maybe some of these chips, AMD, ARM, Qualcomm, at least this version of Qualcomm, we know that Qualcomm's obviously doing level 4 and wants to get into that market, are just want business. And so I was a little snarky there, and I said like investment out, revenue in terms of that investment. But I guess the real question is like, when do they get to level 4? Uber is I don't think in this for level 2, and this is one of many companies that Uber is invested in, having put in just in February $300 million into this company as part of the initial part of that $1 billion too.
Well, clappy hat for you for starters. Here's the clap because you uncovered the signals from the ADAS market. Really, what I'm watching for is how does Wayve's relationship evolve with Nissan? Is it primarily focused on an L2 plus system? And then I did an interview with a media outlet today. When Waymo begins operating drive route in London, and potentially the fact that Wayve is not operating drive route with Uber, does that raise a question for Uber in their strategy? Which brings us to the next topic. It seems to me, based on Uber keeping the press release machine hot, perhaps it's powered by the NVIDIA press machine, Lucid. They seem to be, I'll just say it, doubling down on Lucid. What do you make of this continued investment that Uber is making into Lucid?
Yes, they are in fact doubling down. This is another $200 million investment on top of, I think, what was 300 initially back in July of 25. If you factor in, what the vehicle cost is going to be, because the original commitment was 20,000. I think now this is an incremental 25,000. So we're talking 45,000 cars. Now, granted, Uber wants to, offlay this, and hopefully someone else will come to finance these cars. But just if they had to purchase these cars, which they probably will for a lot of their earlier partners, that's like another $4 billion on top of the 500 equity investment, on top of the 400 million ballpark, I think, that they put into Nuro. So all told, when you think about the Nuro and the Lucid investments, and if they have to buy these cars, you're talking like $5 billion, right? And, the FT obviously highlighted this past week, talking about the $10 billion. There's another potential $4 billion they could put into Rivian if they had to purchase all those cars, plus the $1 billion investments. Like this all adds up, and you're like north of 10 billion, probably closer to 13 billion, relative to a free cash flow number last year that was around 10. So to me, this is like, you have these companies that are investing in AI and they're using all their free cash flow to invest in AI. Uber has tried to position themselves as a free cash flow, hey, we're buying, stock back company. But under the surface, they're making a lot of financial commitments, as they should do. And, we've talked about this on the last podcast. They absolutely should. They should not shy away from this. They shouldn't be upset that the FT highlights this. This is what you, I think, need to do to invest for, the next wave of growth. And to be fair, of that 13 billion, there's only about 3 billion of that, which is equity investments. The rest is just, vehicle financing. That's going to be an important part of it. That's what makes it a capital intensive business that I don't think they're going to escape from. Like, I do not believe that they're going to be able to offload those. This is just the initial cars, right? We're talking about only 140,000 cars, at probably a ticket price of $10 billion in terms of the cost of the vehicles. I'm not sure they're going to get this thing going while Waymo and Tesla potentially are cranking things out, are going to escape from that. But these are, I think, going to be dollars well spent for Uber to be the primary participant in this autonomous future.
But here's the question. Let's just call a spade a spade. Not all of these investments are going to work in these partners. And at some point you are going to have consolidation. Then what happens?
Yeah, I mean, look, some of this stuff's going to go to zero, right? Obviously, like, we want everyone to succeed, right? We're going to continue to monitor all this. But the reality is not everyone is going to succeed. So when follow-on investments happen, then Uber's not going to be there. In some of these cases, if they see the technology not proceeding, if that driver is not coming out of the car, Rivian's not going to get the money. If Waabi doesn't deliver, on whatever they're promising from a technology, they're not going to spend a couple of $1 billion on Waabi cars. So, these things are like stuff that could happen if everything's successful. The reality is that field will shrink over time, and will be here to try and figure out which ones are kind of in the lead and which ones are maybe are falling back. But then what is the real end game? Like, if Waymo remains separate, if Tesla, delivers on the technology, right? Who is the partner, and does it make sense then for Uber to effectively just own whoever that winning partner or two is? Others would say, no, keep them separate, just be the platform. Maybe, but like, if you're really competing for the market share of this growth market, maybe it makes more sense to own that. And, right now they've got decent sized, investments in a bunch of these.
It makes sense to own the way things that are shaping up. It seems that there's a very clear path potentially for Uber owning a Neuro Lucid combination and rebranding it as ATG. And if you look at that partnership, this is the only documented one that I'm aware of where Uber is controlling the in-vehicle experience. And when we were at CES and you sit in the back of the Gravity, that whole digital experience is very, they make it very clear that it's powered by Uber. The other ones, we haven't seen that. That's an interesting sign there.
Look, at the end of the day, like, you're going to worry about turning from this asset-light company. There's some trucking, versions of this, like Plus, right? They're trying to position themselves as asset-light. That's fine. That is the ideal that maybe you want to work for. But sometimes life doesn't work out exactly the way you want it, and then you end up having to own the assets, and there's, potentially a good return on that. I would say that there's, a third, or maybe let's call it the fourth leg on the stool, which is the service component as well. Also, in a way, capital intensive, has maybe low margins, but again, so does Rideshare have low margins relative to booking revenue. But maybe it becomes an essential part of a business that can be very large from a revenue standpoint, that there might be some capital. It's not like always a sin to, deploy capital in order to get growth and get good returns on that investment. And then again, I agree with Dara, over time, you will have financial partners coming in, and you can offlay, whether there's the cars or the service stations or whatever, but there's going to be capital, I think, that's needed to get to that point. And, to Uber's benefit, Dara has gotten the company to a good free cash flow generation position that they can afford, to do that.
Well, they can afford to do it. If you look at, let's go back 6 years, 7 years, when the TCI fund management letter to Sundar telling him to sell off Waymo to do share buybacks. Uber's doing share buybacks and investing in Tom at the same point. When does we get a clear strategy in that? Because Sundar's like, yeah, nope, sorry, I'm continuing to invest in Waymo. Waymo became that. When does Uber signal to the market that this is what they're going to continue to do? Because it seems that Uber's trying to appease both sides of the equation here.
I agree with you from a messaging standpoint, but the reality is they are investing the dollars, and that's really what matters the most. It's less of what you say and more of what you do. And when investors tell you to buy stock back, I mean, as a management team, you just have to have a spine. Like, if you have opportunities to invest in things that investor doesn't have on their own, then you should do that. You should invest in growth. When companies are doing share repurchase or mergers or things, it's because they've run out of growth. They've run out of opportunities where they can get a return on the capital that's better than the individual investor or institutional investor can get separately from them. And then it is their duty then to return the capital. But if Uber's in a position to get a return on its capital because of its dominant position, as the platform, 100%, they should be doing that. Obviously judiciously and at the right valuations, but that should be the mandate of the company. And to a certain extent, I won't use the F word because my mom gave me very negative feedback after listening to the last podcast. But they should go tell investors to fly a kite when there's an opportunity to invest for autonomy. And again, I say this with extreme bias. And what is my bias? That I believe autonomy is the future. It is inevitable. It's happening very fast. And they need to do whatever they can, and anyone in this space, to position themselves the best they can. They don't have multiple decades to get there.
I like that. Hi, Mrs. Piecyk. Thanks for the compliments on the hats. And your son was well behaved today, so well done on the scolding there. Walt got a scolding from mom. If Uber wasn't investing in autonomy, we're having a whole different conversation. So I do give Dar and the management team a lot of credit for doing it. What I'd like to see is more clarity on the overall strategy, and then going below the line, truly, what is the fleet management strategy, as they highlighted a lot? Where are they going to go with that? Which brings us to Lyft. Lyft pulled back the curtain on the Waymo Nashville depot. Pretty interesting, some of the stats they revealed. What did we learn?
In some ways, I love the way Risher approaches this. And in other ways, it's kind of like I got to call some poppycock mom. For example, in this post, when they're talking about Flexdrive, by the way, is Lyft's, this thing they bought. It basically was a service center for rental vehicles. So the car's out for a week. So it's not the same type of daily turnover and fast pay. Everyone's returned a car. You see, how it operates. It's very efficient, especially relative to what we've seen, in some of the depots that we alone have gone to see and visit and peeked over fences to check out. But it's a very different business. So when they say, when they go in this post and say, we know fleet management is absolutely critical, 100%, love that. That's why we've obsessed over it for years. I'm like, what? Like, how have you obsessed over fleet management for years? Like, you don't even have your thing built in Nashville yet for Waymo. You literally just started digging ground now. So I applaud them for getting it. I think this could be, and I think in one of Risher's, David Risher, who's the CEO of Lyft, if you don't know, is in one of his posts on LinkedIn, I don't think even mentioned the platform. In this post, they talked about the vertical integration, but I think the vertical integration is almost like a sidebar. This is a standalone business on its own. And you could have a tremendous synergy in that if you build a strong Flexdrive business, if you build a strong service organization, you're more likely to try and allow or get Waymo to allow you to plug them into your platform more so than maybe your competitor. But I think this alone can substantiate their business if they can do it effectively and get good returns. I think this is a very attractive part of the market. So it was an interesting, I think, I don't want to say it was interesting. There was a lot of fluff in there, but I think it's good that Lyft is leaning into Flexdrive as perhaps a differentiator.
The way that they're leaning into Flexdrive, it could become a strategic asset for Lyft, and it could also become a standalone service, as you alluded to, where perhaps we have markets in the future where it's just Flexdrive without Lyft. We did get details that it's called the Mothership Depot is 80,000 square feet, and in the post, they mentioned that satellite depots will be coming online in the future as well. That's something that you and I have seen in multiple markets where you have the main depot and different depots at other opposite ends of the city. So that was really good insight to get there.
I know that Google or Waymo has talked about, again, everyone wants to be asset light, yada, yada, whatever. But if Flexdrive can get enough scale, right, and you get to this point, this kind of point in the future, which I don't disagree with, where, if let's say your Waymo One app, you're driving them out, there's so much demand for it. But at some point, you need some layer of humans. Like if you have enough Flexdrive locations that are servicing Waymo, it becomes a strategic vertical acquisition for Waymo to make in the future. So I think it positions that company well. And they got to find something, because I don't think Uber is sitting back. I think Uber is starting to kind of turn the screws on Lyft on the traditional rideshare. We'll see how these quarters come out in future quarters. But given what's happening with Waymo, I think it's more likely that Lyft is going to have a little bit more problem on the traditional rideshare business as Uber really starts to try and grind them down.
That's a valid point, and we'll get the market share numbers this quarter, and then we'll continue to monitor them to see where it goes. I can just tell you from a conversation with friends, less and less friends are using Lyft these days. It's just kind of, they just default back to Uber when they're not in a Waymo market, and when they're in a Waymo market, they use Waymo. And I think that is an interesting trend. I had a friend of mine was just in the Valley last week, and he went out there, only Waymo.
Yeah, I mean, that's interesting point. I just want to, kind of throw this in there. We talk a lot about this more on the Lightshed podcast. I have my Mac Mini. I've been doing OpenClaw. I'm doing a lot. It just gives me visions of kind of how the world works in an agentic world, right? And I was thinking about this in the context of, like, I always talk about the service, Flexdrive being the third leg of the stool. Maybe it's the fourth leg, because you've got the technology, you've got the OEM, you got the service. The question is the platform itself, Uber, Lyft, where you're creating the demand, is that the fourth? Is that truly a fourth leg of the stool? Is that essential in a world in the future where I may have OpenClaw, obviously more tech nerdy, that maybe this will be the consumer on Claude later, that says, like, look, I hate riding in a Tesla, like on any of these rideshare companies or whatever, a certain car. I don't want to be in a Honda. I'm going from point A to point B, find me the cheapest version of this type of car. And then your bot goes out, calls a car, sees what it gets, cancels, and gets you the cheapest version of the exact car you want, and completely disintermediates your relationship with the Uber or the Lyft app. I mean, Agentic is coming, and those are some of the ways that that's going to impact it. Obviously, there's another layer that Uber is getting in terms of advertising dollars that would get negatively impacted. But we should think about, like, the sourcing of the rides, which everyone says is this critical advantage that Uber has because of matching rides with all these human drivers in a more autonomous world. And if you're getting rides basically through an agent and not through the app, that changes that dynamic, pretty materially.
You're right. Agents are changing the world. You and I are fortunate that we're able to play with them early, but they're changing the world. That's to say, you're in Manhattan and you want to go to the Yankees game, but you don't want to take the subway. You can have your agent run all day to get you the cheapest price and ideal, and then they'll pick you up and say 4 o'clock, take you to the Bronx. That's coming. And when that happens, the whole demand aggregation goes away. And it's something I think that we really, truly need to watch. So thank you so much for highlighting that.
Yeah, it's also, I just think about our rides in Austin on Waymos. We're trying to get Uber. Maybe we should, next time we go to Austin, build a bot that just keeps pinging and canceling until it assigns us a Waymo.
Yeah, and instead of getting it through the Uber app, we'll get it through Telegram, because when you and I were there and you're sitting there, order, cancel, Gray, take out your phone, order, cancel, Walt, take out your phone. That's not a great experience. But if the bot can do it, it could disintermediate it. Is it still horrible? Yeah, but perhaps that's the way that we go forward.
Yeah, we'll see. All right, what else have we got this week?
This week, we have the state of Maryland. They said, nope, no autonomous vehicles for you. Not happening. Sorry. The legislative body failed to act to pass a bill, which means, for our audience, Waymo will not be operating in Baltimore this year, even though they announced that city. There is a path forward through the Maryland Department of Transportation and the Maryland DMV, potentially, but it'll be very limited of where it can go. The legislative body does not come back until January 2027. They're only in session for 90 days. So Waymo's path to deploy in Maryland is not happening this year. There's a potential for next year. It's politics, Walt. It's all politics.
I mean, I don't think I should comment on this because I might violate my mom's admonitions about using foul language, and my disappointment, obviously, with some of these northeastern states and what they're doing to kind of hold back on the on the progress of autonomy. But what are you going to do? I mean, like I've said before, I'll just restate it, and our longtime listeners know this. Like, it's at some point, you'll see how autonomy works in markets that allow it. I mean, I'm curious actually in Europe with Tesla getting approval to be in Amsterdam. Is it Amsterdam? Yes. How that potentially opens that up to other European cities. Obviously, there's some like anti-Elon sentiment in the EU for whatever reason. But hopefully, and by the way, they're getting FSD. It's not the same as here, right? Where you have people that are still on, different level of cars and a lot of nut jobs doing things they shouldn't do with their Teslas. Like, I don't know how you allow, you're sitting on full self-driving and you just allow your car to drive through a train. Like, that is insane to me. I mean, that's not the way the product's working, whether it's level 2, 3, or 4. Like, that's what you're there to do. But like in Europe, you're starting at you're coming in at a time when FSD, is much better. By the way, I just got 14.3.1, still pretty good. I think this should probably go for wide release soon. So can you imagine if Tesla kind of gets unleashed in Europe and the kind of momentum that gives for the technology in general, meaning just acceptance of the technology, people willing to take their hands off the wheel and embrace the safety benefits of autonomy.
It's coming. And if you look at the Netherlands, there's a path there to legalize it through the EU. Obviously, the EU regulatory environment is very complex, but there is a path. And what we know is that this technology is scaling, which brings us to the Foreign Autonomy Desk this week. The government of Japan, Walt, great country, wants to control 25% of the self-driving market by the 2030s through public-private partnerships investments. I got to ask, because you can't talk about Japan without asking about Masa. Does this mean that the Masa bazooka is getting ready to be warmed up and fired?
I have no idea, but it's good to see some progress, obviously, on the international front.
And that brings us to WeRide, a company that we've covered quite a bit. They seem to be following Wayve's moves as they recently introduced the N60 SUV in partnership with GAC, Chinese manufacturer, to deploy an L2 Plus system for consumer use. So this L2 market is continuing to grow. So it seems that WeRide is running a dual strategy now, an L4 and L2.
Yeah, again, I don't know what the deal is. I have to understand this better, why there's critics that say that someone that does ADAS can't do level 4. I don't know, maybe WeRide has two structurally different things, or maybe the approach for one is different. But WeRide, I think, gets that the market opportunity for ADAS is obviously large, but let's not forget they are one of only a very few companies that are operational in a market, and there's no one sitting in that driver's seat, right? So like, they're kind of doing it both ways. I'm not sure that just because you're doing ADAS doesn't mean you can't do it both ways. And again, I think most offer really big opportunities. The first, ADAS, less interest to me, and I think hopefully to you, because that's really more of like hey, can you sell more cars based on on ADAS? What I care about is full autonomy and how that will structurally change our economy in many of these locations.
Full autonomy, for the record, is no safety driver, no safety attendant. Full autonomy is nobody behind the wheel. To have to clarify that. Now that I clarified that, and I didn't use a bad word this week, even though I will gladly invite you over for fowl. If you'd like me to make fowl, I will cook it for you one night. What do we need to look for in the autonomy markets next week?
Tesla's earnings. So, they always have something interesting to say during the earnings call. And I think Mobileye also has got some earnings. So maybe they can update us on the ADAS market and what's going on in I guess in LA, maybe confirm the Volkswagen situation.
Well, hopefully we get confirmation on Volkswagen, and hopefully an analyst on the call asks about the Vern relationship. Love to know that. In the VW, the market needs clarity on both of those. The future is bright. The future is autonomous. The future is depots. Walt, until next week.